Welcome to TradeTheNBI.com. This is John's reports for the 27th. Well, we hit up against again the same ABM yellow here has been resistance. We keep trying to get above it, but gets knocked back down. So sellers clearly want to exit right up in that range at this particular stage until they're overwhelmed by buyers. That's the play. Now, it's interesting we're seeing an upside pivot of orange. If that happens, we're likely to see sideways because that's just a continuation move when we're between um, cyan and red. The DOC orange usually gives you continuation. In this case, that's been nothing but sideways with a slight upward push. Not anything strange. We are getting pretty deep in the lack of short interest here, which is making it much more difficult for longs to push this higher. So bulls are really kind of constrained by trying to force through. No real forced buying, and it becomes a little bit more difficult. As we've talked about, the NQ in far worse shape, and that disparity makes things a little uneven. And this is part of that transitional trade that you get between now, where they believe Kamala Harris wins. So you get a rotation from various sectors into new ones that they believe will be more active. And, in those cases, they're going to be looking things that are looking for devaluation of the dollar to continue versus a Trump trade, which would probably be slightly inverse of that, even though some will argue similar because they say they both want tariffs. Well, that's not exactly accurate. Trump's idea about those is more punitive for those that are behaving with subsidized support from the government, kind of unfair trade practices versus just general tariffs to kind of create jobs. But at the end of the day, when you're bringing in tens of millions of new people, that really puts a downward pressure on wages. And it's interesting that the Fed has shifted towards their employment issue, because who are they counting now as far as that employment goes? Because if you look at their official numbers that supposedly everyone is buying, everything's wonderful. When you look deeper into the data, of course, you realize that there were no new jobs created for Americans, that most of them came from workers that were not native to the country. It poses an interesting question. Of course, the Fed has gone into that dovish mode, which everyone wanted to hear, but there are limitations to it, because at the end of the day, you still have to account for what the real world is doing. And in this particular case, the real world has to deal with oil. Treasuries, way off the mark. Of course, they're expecting a half point or better cut coming forward. Not happening. Even though they might want to do that, and no question in my mind, they would love to be able to do that. But you just look at this chart, the oil. You're getting close back up to 80. You still have world tensions that are potentially causing other issues. Libya announced change in their production situation, force majeure. Problems all around. And with oil at this, you have a bifurcation. Fine, you're going to have lower wages in America, which will stymie inflation from that standpoint, but not as far as products go, because it's going to cost more to get the goods. And as long as oil remains in these kind of modes, no, they don't stand a chance. They're just going to lose and they're willing to lose the inflation fight, is really basically what he's saying. However, they've been job loaning for 2 years now and still haven't done anything. So see it when you believe it, kind of thing. In fact, that's the whole point, because this is the trade is for the rumor, and the news will sell off significantly, particularly if it's just modest, or if there's not anything at all, it will be devastating. And this is the Harris trade of devaluation of the dollar here from the euro, and it continues to climb. So when you see the euro start to fade, you'll understand that the expectations have shifted in the election. And that's how you follow the money when it comes to the political side of things. Do they get it wrong? Yeah, quite a bit. So would I would call it a reliable predictor? No, not at all. This is the anomaly to it, because within these setups, gold should be falling with lower rates and everything else, because the investment should shift towards that. And it's not happening because, again, it is an understanding that there is a clear debasement and nobody is willing to move back into U.S. debt, given the idea that, they could just seize your money if they don't like the way you behave or think. And, that created a whole new dynamic of, they always talk about moral hazard when it came to the financial crisis and not wanting to help, individuals out with mortgage situation. Instead, they bailed the banks out, thinking that there was no force, you wouldn't have any moral hazard there. But what did the banks do? They did the exact same thing. So I mean, clearly they got that wrong. But who pays for the politicians? The corporations that they gave the breaks to. So that's how that works, and it's clear to understand it. And you can complain about it; doesn't make any difference. It's just is what it is. For Bitcoin, it's going to be still a net positive for all the cryptos, everything alternative currency, and even certain commodities. It's all going to be boom. Now, the commodities that are going to suffer a little bit are the ones related to actual use trade, because as we continue to see, the consumer is tapped out. He doesn't have anything left, and that is a majority of economic growth, and that is where things are going to soften first. And of course, the Fed's going to be behind on this regardless. And even if they wanted to cut rates to boost employment, that's just going to drive inflation, which will further create a whole different set of scenarios. And if they're willing to just pass the buck, hoping for, positive outcome for the election, and that it's not going to help them. I mean, they all claim that it doesn't matter which party, but it makes a huge difference as far as Fed policy is going to go, because the policies are so different. They will create two very dynamically different views of what economic growth would look like. So Powell was trying to recognize that while joking about their broad miss on inflation being transitory coming out of COVID situation, which we all laughed and mocked them when they were saying that. And I told you back then there was nothing transitory about it. It's just shocking, this simple understanding of what economics is, and that these guys are the ones that run it and seem to have a very clear understanding of generally how real people live. ETH not doing a whole lot of anything at this particular stage. My 50K not popping up. Looking at the 5K, 5 minute in this case, the market opened up and just trailed off immediately. And then, from an option standpoint, they had to bring it back up into a mid-range, and it's kind of held pretty much within that little bubble so far throughout European session. But light push-ups, you get a little positive open that could take away some of the gamma from puts in that, and then you recycle it again. But there's difficulties ahead. The Nasdaq really being in such disparity from the ES is going to create a bit more volatility. So expect that, and until that evens out, and it's not going to be hard to see for us from a daily standpoint. But they're very divergent at this particular stage. So you're going to get significant winners and losers, and that's just going to create some choppiness. That's the long and the short of it for now. As always, anything relevant, I'll put on the Skype chat for you. Have a good one. Trade well.